The thing is, there's a lot of SMSFs out there, obviously, that invest in things like shares and, bank accounts, that sort of thing. So very generic, nothing, no related party dealings, non-arm's length income, non-arm's length expenditure doesn't really have a lot of relevance to them. But anybody who's has some sort of related party dealings, so you might have your house, a residential house in an SMSF, and you want to do some works on it, or you might be in some sort of industry where you can provide services to your SMSF. So it might be you're an accountant, you can do the accounting work, or it might be you're a real estate agent and you want to do manage these properties. So that's where these non-arm's length issues come about, because you need at its core non-arm's length dealings, so uncommercial dealings, and the super fund needs to get more than it should. So many of those funds which have none of those sort of things, they don't have to worry about it all. For those funds that do have those particular assets, they need to be particularly careful of it. And what you find is some of them is, they are on top of these rules, but most of them, it's through their advisors that they get, the advisors effectively have to advise them about these issues. So we initially had our non-arm's length income rule, so NALI with an I, and that's that test where non-arm's length dealings got more income than they should have. Then we had these problems, the ATO raised these issues in particular around not a limited recourse borrowing arrangements, so super funds borrowing, and they were borrowing from related parties at either nil interest loans or low interest loans. ATO clearly didn't like that, and I think industry accepts that they weren't appropriate. Then there's a change of law, and now we've got the non-arm's length expenditure rules, and they effectively say if there's some expenses, non-arm's length dealings, and sort of expenses that either aren't charged for at all or are charged at lower than expected, that taints, if it relates to an asset, that asset, or even more concerning, if it doesn't relate to an asset, taints the whole income of the fund. And the consequence of that, whether it's NALI or non-arm's length expenditure, is the whole income of that particular asset, income or capital gains, or if it doesn't relate to an asset, the whole income of the fund is taxed at 45%. So the issues that I raised in my presentation today was that there's no proportionality around that. So you've got this real adverse outcome where you don't charge $1,000 to do some accounting services to your fund. That's a non-allocated expense in the ATO's view, and then all of the income for that year is taxed at NALI. So if your fund earns $100,000, it'll be taxed 45%. So that's a $45,000 tax bill for not charging $1,000 or whatnot. So that's the issue that really has concerned the SMSF community. The ATO's views of the world is that if there are dealings, related party dealings, in what we need to have is some benchmark where the ATO has some comfort that you are dealing on an arm's length basis. So if, for example, you are doing some sort of services, so you're managing the property, for example, through your account, through your real estate business, you should either charge what you would charge everyone else, or if there's a discount to staff, then you can charge the staff discount. So those sort of things, it's about really putting things on a commercial arm's length basis, and that'll give you as much protection as possible against an ATO review. Yeah, probably where I see it most in practice is loans. So a loan to an SMSF under a limited recourse borrowing arrangement, or if they're invested in, the SMSF's invested in a company or a unit trust and there's a loan to that. And there's the question mark of, is that loan on commercial terms? And that's where we've had, in recent times, I guess, a more strict view from the ATO about how do you prove whether it's on arm's length terms, and that goes back to that benchmarking. So the more benchmarking you get to support, this is what a commercial lender would lend to me, to my SMSF, or to this company or this unit trust, you're in a safer position. The other issues you see, especially in the ATO's ruling on non-arm's length expenditure, they're going to be a lot more difficult to one, pick up, and two, benchmark. Like if you're doing building, if you're a builder and you do building services, you fix up do some repairs or whatnot to your property, how do you prove it's on an arm's length basis? If you're a professional and you're doing some sort of professional services, again, how do you prove, professional services have a wide range of how much you charge. So, how do you prove what you're charging this on an arm's length basis? So you can see the difficulty that the industry is grappling with this, and that's why the law change that hopefully will be made will offset a lot of these difficulties. One, there's this that the ATO have got a view about two aspects of non-arm's length expenditure. They've got allocated non-arm's length expenditure, which is, say, a nil interest loan under an LRBA to buy an asset, and that taints that asset, so the income and capital gains is taxed at 45%. And I think most people are okay with that. Then you've got this second view of the ATO, the non-attributable non-arm's length expenditure, where it's not attributable to a particular asset, so all of the income of the fund is taxed at 45%. I think everyone in the industry has a problem with that, and that's in particular why a lot of industry groups have made submissions to government to have that changed. And I think, going back to your question, where the grey area, it's just the whole concept is grey, and having to prove a lot of these dealings are at arm's length are really difficult to benchmark to sort of a level where we're seeing what the ATO expect. So the government have announced that they will change the law. So as I said, before, there's a lot of pressure put on the government to say, look, these aren't working, this is disproportionate, and we really need some changes. So the government have announced that they will change the NALI rules to work as they should. Problem is, we don't know really what that means, and also the second problem is that was an announcement before the election was called. We don't have any legislation yet. We don't know whether Labor would support that measure as well. Hopefully so, because it affects all super funds, not just SMSFs. So we're hopeful we get a better change and have a better system, but time will tell. Look, people often say, well, what about these staff discounts, and what about the ATO view on that? Or I've never charged, for doing this sort of stuff to my SMSF. Well, if you want to be 100% conservative, you would never do a related party, dealings, or as much as possible you wouldn't. So get another person to do it, and they get charged the normal rack rate. If you're doing it yourself, the second most conservative is to just charge the normal fee. If you don't want to charge a fee, or want to charge a discounted fee, that's where these complexities arise, and that's where you should get professional advice to really make sure that's done correctly.